Hi there and welcome to the Duke of Soppy TV studios here in Geneva. I'm Sam Meredith and here today to discuss Islamic finance is Mr. John Sandwick from Safa Investment Services. Welcome, John.
Good afternoon, Sam.
Now, first of all, for today, we've seen the Ernst & Young GCC Wealth and Asset Management report is saying that wealth in Saudi Arabia and the Gulf is improving. But what more can you tell us? What are the highlights from this report so far as you can tell?
Well, everybody always assumes that the Gulf Arabs are rich, and to a large degree they're correct. We've seen enormous amounts of wealth generation in Dubai, Abu Dhabi, Qatar, Riyadh, Jeddah, Kuwait for generations now, for at least 40 years. But what's important is that we're now starting to see a greater equality of wealth generation, if you will. For the first time ever, Saudi Arabia and the Gulf states have joined that rare group of countries, that rare club, where they have among the world's highest percentage of households with over $1 million of financial assets or more. And the total amount of wealth in financial assets is now estimated at over $3 trillion. So do the Gulf Arabs and the Saudis have investable money? Yes, a lot of it. Interestingly, part of this report decides or describes who's managing that money. And now we know what we also suspected to be true. 70% of that wealth is managed by offshore banks and 30% by domestic banks. But what does that mean? 20 years ago, 0% of that wealth was managed domestically, and now 30% is managed domestically. So as a ratio, we're seeing the domestic wealth and asset managers getting a bigger and bigger share of the market at the expense of the international wealth and asset managers.
Okay, so these major services, do any of them actually offer this Islamic wealth management?
No, nobody does Islamic wealth management. That is still the holy grail for a lot of people because we're talking about a region that's 100% Muslim. And, personally in my career, I've known clients of the hundreds of Saudis accounts that I've opened in Geneva, they were all for Muslims. And when I see these people today in their homes and their offices and their social environment, their business settings, I can guarantee you they take Islam very seriously. If you will, there's been just an entire shift in the entire population toward a more fundamental approach to spirituality. Sharia counts for them. And so it's surprising of the hundreds of billions of dollars of Saudi and Gulf money managed here in Geneva that none of it is done according to Sharia.
Okay, and your doctorate at École de Management, this is related to this, I believe. Can you tell us a little bit more about what you found out here?
I'm getting my doctorate at the Grenoble École de Management, and soon I will pass my stage 1, all based upon studying and researching and analyzing the universe of investable securities. Asset management has evolved over 80 years to be a highly professionalized and regulated industry. And modern portfolio theory, in parallel with the formation and maturity of that industry, has become a much more adept and useful tool for asset allocation and asset management. At the very bottom of that, the very basis, or the very foundation of that, is the data on your investable universe. What can you invest in for your client? And we've done, for the first time in history, the bottoms-up research on what a Muslim can buy in the world of securities that meets the highest standards of Sharia. And in that process, we've come up with some astonishing findings. We look at the mutual fund market, the Islamic mutual fund market, where there's about $53 billion of assets today. Well, when you remove the products that are not professionally or regulatory acceptable, 99% of what's left has daily liquidity. 80% of that has a track record of 5 years or more. And what we're seeing is that there's a very robust, large, rich pool of assets that you can allocate your clients' money into, whether it's a money market fund or a fixed income fund or an equity fund or an alternative investment product, and meet every possible regulatory and professional standard.
Okay, well, bringing that to Geneva, making it relatable to Switzerland, how is the Islamic finance industry affecting people here?
It's going to be a long haul before Islamic finance has any meaningful impact in Switzerland outside of private banking. I believe that places like the Canton of Geneva should start issuing sukuk. They've been issuing Eurobonds in the Eurobond market for 20, 30 years, and I think have a few billion outstanding. There's no reason at all that the Canton of Geneva and every other canton of Switzerland that issues Eurobonds should not issue sukuk. There's a thriving large market of buyers for sukuk. And when I think recently, a year ago, we had the government of UK, United Kingdom sukuk was issued, and it had 12 times oversubscription. That means there was 12 pounds of offer for every 1 pound of availability. Now, which market do we see 12 times oversubscription? Where? Oh, maybe in a Uber IPO we might see that, but that's about it. You never see that in the bond markets. So I think the treasurers of the City of Lyon, the Paris Airport Authority, the Canton of Zurich, the Canton of Geneva, they should start looking at the sukuk market as a source of alternative finance that is essentially and always on equal terms to the Eurobonds, but it's a different source. Diversification of funding sources is one of the chief responsibilities of corporate and municipal treasurers.
John, thanks so much for coming in today.
Well, thank you.
And thank you for watching. Keep looking back to Dukascopy TV for more updates and exclusive interviews. We'll see you next time.